Here's a look at market action for the day gone by. A range-bound day for major averages, but a strong one for high beta and momentum stocks as the overnight surge in commodity prices fueled risk-on trade. Real estate and metal stocks were in demand, and on expected lines, money moved out of FMCG and IT stocks remained shaky, slightly ahead of numbers. The hallmark of today's trading activity was market breadth, which remained actually quite charged up, and the number of advances really outnumbered the number of declines by quite a wide margin. So if you really have to pin it down to the key highlight or the key talking point for the day, I would say it was momentum stocks, real estate stocks, and to a large extent some niche infra name as well. So what's the way forward for Indian markets from these levels? Let's discuss that and let's debate that. To talk about market technicals for you on this edition of Markets Tomorrow, we have Mehrbon Irani. He represents Nirmal Bang. And to throw more color on the technical picture, Sandeep Wagle, Managing Director of Aprat Technical Advisory Services. Sandeep, Mehrbon, gentlemen, good evening. Thank you for joining us. Sandeep, for this entire week, we have been range bound, and I would say that is on expected lines.
Yes, I would agree with you in that sense. Specifically, if you talk of the indices, if you talk of the Nifty, we are on the threshold of a breakout. Today it looked for a minute like it was breaking out at 5320, 5325, but again it clawed back in. But I must say that the bias is on the upside, and there are a lot of individual stocks which are displaying patterns which suggest that sooner than later I think the Nifty will be also on the way up and we will be nearer 5400, 5450. So a breakout is just around the corner is what I would think so.
Mehrbon, look at crude, look at copper, look at gold, and check on soft commodities. Commodity prices have appreciated, which means in the near term macro concerns will surface up. But today markets have decided to ignore all the macro concerns.
I think, Nikunj, over the last 3 weeks, that I have been stating that the time to become optimistic has come without going overboard. I think problems facing India possibly could be now behind us. I think whatever we will hear from India on the macro front should be positive. I am quite positive the current account deficit numbers should come down because gold imports have come down and oil has come down. I think rupee depreciation, whatever had to happen has happened, and rupee has strengthened from there. So oil rallying again from 86 to maybe $100, I think shouldn't be too much of a problem as of now. I think we are much better off than what we were possibly a month and a half, 2 months ago. I would put it that way. I think a lot of hopes have now come into the market. People have become optimistic, especially with Dr. Manmohan Singh, a man who has proved himself in the past as a finance minister. Possibly some remarks coming from the finance ministry makes people feel that a lot of things will happen maybe after the presidential elections. As far as the global thing goes, the European summit was a great positive for global markets. Now the hopes are on the ECB cutting rates. The hopes are some stimulus coming from China, but the data is bad. Even the PMIs from all European countries makes you feel that the ECB will cut rates. And the Fed also comes up with a stimulus. Too much of money will come into the system, which ultimately will get reflected. Commodity prices possibly moving up, oil also moving up a little bit more. But ultimately asset classes, the risky asset classes also will do well. So there are reasons to continue to be optimistic right now.
Mehrbon, if risk on indeed is making a comeback, why is this good news for India? Because risk on means dollar will go down and commodities will appreciate. And if commodities appreciate further from these levels, then it could take us back to a high inflationary scenario, which is bad news for currency, which is bad news for earnings, and which is bad news for India in general.
I think if you compare India to other countries, especially the big countries, I think India is much better off. I think the media, the analyst community, the men on the street, as well as the fund managers have been too negative about the macro factors. And I personally feel the macros as far as India is concerned can only improve from here. I think it's true what you are stating, but ultimately we have seen it in the past also, that when money comes into the system along with all asset classes, also equity also makes a dashing comeback. And that's what has happened. We are already up possibly nearly 8, 10, 15% from where we were just about 2 months ago. And yet we are still refusing to believe that we are 15% above. And possibly if we move up about 100 points more on the Nifty, for all you know, Nikunj, you and I will face more inquiries as to what we should be buying in the market.
Well, when we started the calendar year 2012, the best case scenario was that Indian markets for the year 2012 will appreciate by about 15%. And this year we have already appreciated by about 12% in local currency terms. So that to my mind is a great outcome. So whatever could go wrong for India has actually gone wrong in last 6 months. We've got a sub 6% print on GDP, a warning from S&P, a downgrade from Fitch, a broken down IIP number, an investment cycle which is refusing to pick up, but markets are still holding on. That is what to my mind is called as resilience. Okay, some more stocks which were in headlines today. ONGC, they are going global. Ashok Leyland dispatch numbers, I would say they were very ordinary, and 3i Infotech went up on strong volumes on news that ICICI Bank, the parent, they have increased their stake in 3i Infotech. Metal stocks, that was the key talking point today. Sterlite Industries, biggest gainer on the Sensex, on the Nifty. It's 111 rupees now for Sterlite Industries. If metals were up, crude was down, and that had impact and implications for oil marketing stocks. HPCL, BPCL and IOC, all of them corrected on very low volumes. Some top traded counters now. On Mobile was the top traded counter on both the exchanges. HDIL once again did see some trading activity. HDIL in quick time has appreciated from about 80 or sub 80 levels to 92, and then Lanco also indeed went up on strong volumes. So the bottom line here is risk, high beta, momentum. These groups are making a comeback. Sandeep Bagle, what do you make of the price action in metal stocks today?
Well, Sterlite was the pick of the lot, is what I would say, and I was very bullish on Sterlite, and I am still bullish on Sterlite. I see another 4-5% upside even from the current levels. So if you talk of metal stocks, I would be very stock specific. I don't see that kind of a strength in the Tata Steel or Hindalco. But a Sterlite I am willing to buy even at current levels. So that is what it is. And I don't want to be buying all the metal stocks. A Sterlite, a JSW, a Jindal may be on declines. And I would talk of it as a trading move. I don't want to just buy it and hold on for the next 3 months. No, that is not the view. The metal space can be choppy. And unless you book profits at certain levels, it doesn't make sense just buying and holding on.
Okay. So metal stocks were in demand today, but today India's biggest institutional brokerage, CLSA, they have downgraded their outlook for consumer staples. So the question we are asking, it will pop up on your screen, is CLSA justified in downgrading consumer staples? Mehboob, react to that one.
Well, each one has own opinion, I would put it that way. I think this particular space, if you ask me, has performed exceptionally well. Now, whether demand is going to come down, whether inflation is going to have its impact, I honestly don't think so. The fact is, yes, the stocks are expensive. I'm not saying no to it. The fact is, if we have a market which can possibly move up 200, 300, 400 points, this sector could underperform relatively as compared to others which have been beaten down very badly. But
so you smell a slowdown there?
I would say that, I would put it, Nikunj, this way. Some slowdown, yes, but more important is the stocks are relatively expensive to the market. The fact is, if somebody is holding on to a lever or an ITC at this price, should he continue to hold on? If he's an investor, I would say, I don't think you can ever buy the stocks again, because even if the stocks correct by 4-5%, you don't buy it again. Not many investors can do it. But from a trading angle, I don't think there's other stocks which are going to be fancied. So from that angle, yes, I agree with whatever the report is stating. But on the whole, I think it's going to shift to the urban areas. I think stocks like a Nestle, a VST Industries, possibly even a Bajaj Corp, will be the stocks in this particular speech which will look more exciting, because if the monsoon revives, I think possibly FMCG and even the entire consumer staples, I think possibly could come into focus again.
What influenced markets today was global commodity prices. What could influence markets tomorrow? Well, more than global commodity prices, the perception towards risk. Fund managers love to use this terminology. It is called risk on trade. Now, what is risk on trade? Risk on trade means high beta stocks, emerging market equities, commodity prices, they tend to appreciate. Similarly, safe havens like dollar, US treasuries, and German bond prices, they tend to underperform. So that's the picture for you. Flavor of risk on trade indeed is back. Oil is up by 14% in last 3 days. Copper prices are at a 7-month high. The BSE real estate index is up by 5% plus only in this week. And ADIG stocks, which are often considered as a true indicator of momentum, on average ADIG stocks this week have appreciated by about 4 to 6%. Sandeep, there is price action, there is volume action, and there is trading action in momentum stocks. Technically, which is the strongest momentum stock, and which is one momentum stock you think our viewers should buy tomorrow morning?
There are a lot of stocks, Nikunj, which we can recommend, but if you ask me, and I know you will ask me whether I have bought that stock, so disclosure here that I have. A McLeod Russell, now whether you treat it as a momentum or not, I don't know. TTK Pharma was a great stock 2 days back, but a phenomenal move has come in it over the last 2 days. So at this point in time, for tomorrow or for the next couple of days, I would go with a McLeod Russell and play for a target of 5 to 7 to 8% on the upside.
I guess I'm getting very predictable. Need to, frame and phrase the questions differently. Sandeep, so let me ask you a different question. What are you selling these days?
When your view is so bullish, Nikunj, you should not sell into anything. I had a bearish view on the IT space today. TCS did not fall, which I had a sell on for intraday, but Wipro was correcting. I had a sell in a Hind Unilever a couple of days back at a 450 level. It came down to by some 15 rupees, and that is all about it. I don't have a sell on any other stock because my market view is bullish, and I believe that you should play on one side, catch the trend and ride on. So the smaller trend I would like to ignore, and in that sense I am not selling anything.
Maruti, they came out with solid dispatch numbers, and Maruti of late has been a marked outperformer. Melbourne, I wonder why Maruti is outperforming, because we can have a long discussion on why Maruti in the near term should underperform, be it market share or competition in the passenger car market, or what is happening to petrol sales or petrol car sales.
On the whole, honestly, if you ask me, I think the domestic car segment right now in India, I think is going through a very tough phase, and I don't see things improving, at least not for the next 1 to 2 quarters. I think post Tata Motors numbers and post the analyst meet, some money has definitely gone out of the script Tata Motors, and Maruti being an underperformer at least for the last 2-3 months, the money has gone over there possibly. That's what I'm assuming. Point number 2 is Maruti and M&M were the only 2 companies whose dispatch numbers looked good, but for Maruti I would like to add that the numbers look good mainly because year on year, last year was affected by the strike, by the lockout I would say. So I won't like to look too much at any of the 4-wheeler companies right now from the buying angle. So I'm not going to recommend any of them, and Maruti is certainly not at this present price. I think the company has its own problems on the currency front also. So Maruti at the present level is definitely not a buy from my side. I think the only stock which I would like in the 4-wheelers would again be Tata Motors. I think around 225, 230, if you get it again, I think it would be a decent longer term bet. Though in the shorter term, I don't think even Tata Motors could go about 265, 270, at least not for the next 1 to 2 quarters, because on the whole, the picture on the domestic front, the auto market, looks a little bit gloomy right now.
Voltas today appreciated by about 7% plus, 115 rupees for Voltas. Sandeep Agle, do you smell strength there?
Nikunj, I do. Though I would have been happier buying this stock at a level of around 108, 109, but nevertheless at 115 can be bought on little bit of a declines or corrections to 112. And with a stop loss of say 107 or so, I would play for a price target of around 125 to 128.
The 2 stocks which have been marked outperformers this year. First is Reliance Infra. Reliance Infra this year is up about 60% plus, 65% plus to be precise. And the second one is BPCL. Melbourne, when we started the year, who would have thought that the best performing Nifty stocks would be a construction company and then be a OMC stock?
I think Reliance Infra is attracting a lot of attention of late, and I think that is one stock in the infrastructure pack which even at the present level looks honestly interesting. As far as the oil marketing companies go, I think BPCL had got its own reasons to attract attention, and I think therefore about a month ago, I think on your very channel I had mentioned that HPCL now looks interesting, and I think oil marketing companies had a good time last month. So there could be a little bit of profit booking here and there, but I think in the oil marketing companies, I would leave BPCL aside because I think too much of money has gone into that stock. But I would still look at possibly HPCL if you give me around 3 to 4% below the present levels.
Sandeep, how would you approach oil market, OMC's oil marketing stocks? Do you think the BPCL spillover effect now will be visible on HPCL and IOC also?
Nikunj, though I am bullish in this space, they have a very typical or a peculiar way of movement. They give a breakout and then they move sideways. That has been the problem with them. So as a trader, I am not very comfortable buying into this kind of stocks with a very short-term outlook. Short-term is as in a few days or so. If you take a view of a few months, then I am more comfortable. So yes, with Mehrbun on that, 5 to 7% immediate upside over the next few weeks looks likely. A couple of percent down can be bought on correction. But as of now, I don't see anything beyond that. I mean, unless the market moves up one way and goes to 6,000, that would be a different story. You could get those stocks at little lower levels, and I would play for a 5 to 7% trading upside.